Hi, I'm Marc, and on this channel I talk about Brexit and UK politics. With the UK's withdrawal from the EU, the remaining major trading hubs in Europe are solidifying their market stance at the moment. However, Germany is benefiting only to a limited extent, according to the EU securities regulator ESMA. But Brexit has shifted the balance in European stock trading in favor of Amsterdam and Paris. And following the UK's decoupling from European financial markets in early 2021 because of the TCA, the trading volume of foreign stocks surged at exchanges in the Netherlands and France, as noted by the EU securities regulator ESMA in a report on the European stock market at the beginning of the week. While Germany remains an important stock exchange location, it attracted only a smaller portion of the trading. The stock market, following the United Kingdom's exit, remains highly concentrated on a few trading venues, states ESMA. In Germany, stock trading is primarily centered around the Deutsche Börse, as well as a few regional stock exchanges. However, in the Netherlands, France, Italy, and some other locations, the pan-European exchange Euronext dominates regular trading. Additionally, ESMA monitors over-the-counter trading, which has lost significance with the UK's withdrawal. Excluding the UK, the total trading volume of foreign stocks decreased. The trading volume of securities from other countries within the European Economic Area averaged 7.2 trillion euros in 2019 and 20, but it dropped to an average of 3.7 trillion euros in 21 and 22. The turnover of other foreign stocks declined from 4.1 trillion euros to 1.9 trillion euros. Overall, stock trading is now more concentrated on the respective domestic markets. Previously, German stocks were predominantly traded abroad, but now nearly two-thirds of the trading volume is on the domestic market. And this trend is also observed in other EU countries. Furthermore, European stock trading with a volume of 13.4 trillion euros in 22 is considerably smaller than before when it included the UK, which led to a total of 25 trillion euros. For comparison, the US had a trading volume of approximately 86.3 trillion euros in 22, and the concentration is even higher there. The exchange operators CBOE, Nasdaq, Intercontinental Exchange, and Miami International Holdings control the majority of trading venues. The stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt have all benefited from Brexit in some way still. Dublin has become a major hub for financial services since Brexit, with many companies relocating from the UK in order to maintain access to the EU market. And this has led to a significant increase in trading volumes on the Irish Stock Exchange. In 22, the ISE saw a record 1.3 trillion in trading, up from 940 billion in 21. Amsterdam has also benefited from Brexit, as I already said, with many financial services companies relocating from the UK also to this city. And this has led to a surge in trading volumes on the Euronext Amsterdam exchange. In 2022, Euronext Amsterdam saw a record 14.3 trillion in trading, up from 11.8 trillion in 2021. And Paris has also seen a significant increase in trading volume since Brexit. The Euronext Paris exchange saw a record 22.3 trillion in trading in 22, up from 18.7 trillion in 21. And as I said, Frankfurt has also benefited from Brexit, with many financial services companies relocating from the UK to the city. This has led to an increase in trading volumes on the Deutsche Börse exchange. In 22, Deutsche Börse saw a record 92.2 trillion in trading, up from 81.6 trillion in 2021. Overall, the stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt have all benefited from Brexit in terms of increased trading volumes and their market shares. However, it's important to note that the full impact of Brexit on the financial markets is still unfolding. We are still not there yet. In addition to what I mentioned earlier, the stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt have also benefited from Brexit in other ways. They now have increased liquidity. The relocation of financial services companies from the UK has led to an increase in liquidity on the stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt. This has made it easier for investors to buy and sell shares and has led to lower transaction costs. And then we have the increased market depth. The relocation of financial services companies from the UK has also led to an increase in market depth on the stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt. And this means that there are more buyers and sellers for each share, which makes it less likely that prices will move sharply. And we have an increased international profile. The relocation of financial services companies from the UK has also raised this international profile of the stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt. This has made it easier for foreign investors to access these markets and has led to an increase in trading volume from outside of the EU. And overall, the impact of Brexit on the stock exchanges in Dublin, Amsterdam, Paris, and Frankfurt has been positive. And these exchanges have all benefited from increasing trading volumes, market share, liquidity, market depth, and the international profile. The lack of services regulation in the Trade and Cooperation Agreement, the TCA, between the UK and the EU has, on the other hand, harmed the British banking system in a number of ways. First, we have increased costs. British banks now have to comply with two sets of regulations, those in the UK and those in the EU. And this has led to increased costs for banks, which they have had to pass on to customers in the form of higher fees and charges. And they have reduced access to EU markets, because British banks have lost their passporting rights, which means that they can no longer freely offer their services in the EU. And this has reduced their access to EU markets and made it more difficult for them to compete with other European banks. And of course, there's this increased uncertainty. The lack of clarity about future regulations has created uncertainty for British banks. This has made it difficult for them to plan for the future and has deterred investment. And overall, the lack of services regulation in the TCA has made British banks less competitive and has harmed the British banking system as a whole. And it was the Brits that did that, not the EU, as some trolls say. And there are some specific examples how the lack of services regulation in the TCA has harmed the British banking system. First, we have the investment banks, because British investment banks have lost access to the EU market, which has led to a decline in their business. And then we have retail banks, because British retail banks have had to increase fees and charges in order to cover the costs of complying with those two sets of regulations. And of course, we have the asset managers. And British asset managers have had to apply for individual licenses to operate in each EU country, which has been a costly and time-consuming process. And the lack of services regulation in the TCA has also made it more difficult for British banks to raise capital and to attract and retain talent. And this has further undermined their competitiveness. But there's something, I can't leave out another pretty incredible topic this week that has nothing to do with banking, but it's important. And at the beginning of the corona pandemic, Boris Johnson is said to have asked whether a special hairdryer could kill the COVID virus. And this is what his top advisor at the time, Dominic Cummings, claimed. And that's a big news here in Germany at the moment. At the beginning of the corona pandemic, former British Prime Minister Boris Johnson is said to have asked whether the special hairdryer seriously could kill the COVID virus. And Dominic Cummings said this on Wednesday to the committee that's investigating the British government's handling of the corona pandemic. In March 2020, Johnson showed England's chief medical officer, that's Chris Whitty, and Chief Scientific Advisor to the government Patrick Vallance, a YouTube video in which a man blew into his nose with a special hairdryer to kill COVID, explained Cummings. And the Prime Minister seriously asked Whitty and Vallance for their assessment. It was a low point, according to Cummings. The former Johnson advisor, who came under criticism in spring 2020 for violating the corona rules and resigned in November of the same year, fundamentally criticized the former Prime Minister in his statement. Johnson was extremely distracted due to personal and political problems when the coronavirus hit Great Britain. He had to finalize a divorce and was having financial problems because of that. That's what Cummings wrote in his 115-page written statement. And he wrote, an ex-girlfriend made allegations against him in the media. His girlfriend at the time wanted to finalize the announcement of their engagement. And Johnson also wanted to complete a book about the English poet William Shakespeare. The coronavirus had killed almost 130,000 people in Great Britain by July 2021, and the country was one of the hardest hit countries in the world. As part of the government's response to the pandemic, Johnson and current Prime Minister Rishi Sunak, who was Chancellor of the Exchequer or Finance Minister at the time, will also be interviewed this year. But this whole story fits very well with what I recently talked about, the WhatsApp messages of Boris Johnson that were in this committee already. It is quite unbelievable, and so I couldn't leave that out to have this included in one of my videos this week. But if you want to know more, the next video is right in the end screen. I'll see you there. I'll be back.